Hello, traders, and welcome to our episode 3 of the trading psychology. And today I want us to discuss briefly about the psychology of FOMO, that is the fear of missing out. And this is basically, as we discuss this, I'm going to share ways that will help you to stop chasing trades and start winning trades. Because the moment you trade with the FOMO, then what happens is that you end up losing quite some good setups. All right. So the first thing is for you being in a point to understand what is FOMO, and FOMO is the fear of missing out. All right. And what FOMO does is that it causes rushed entries and over leveraging, and also there then comes what we call emotional exits. All right. And it's common, especially it's a common mistake, especially when markets move without you. That is when you find that you have a setup, you are waiting for the market maybe to come to your entry, but due to one reason or the other, you are not able to see the market come to your entry. And then now, maybe the moment that you are seeing the market, it's already maybe 10 pip up from your entry after triggering your entry. Let's say maybe, for instance, it was a buy, all right? And then now you tend to take trades even after the market has just gone. So what it does is that it increases the risk. So in case we have the market retrace, therefore it means that you're going to risk more than you had planned to risk, right? So and one of the key things with FOMO is that what it does is that it distorts your judgment, all right? So remember, as a trader, you need to be very sober in mind, basically being in a point whereby you can be able to make very swift judgments in the market. And that means not really swift, but like high probability decisions making in the market. You need to be alert, okay? So what FOMO does is that it overrides the logic and your analysis, because you had already analyzed. Maybe you are waiting for the price to come to point A. So price has already tapped point A and left you going to your direction, right? So now it distorts your logic, your thinking, and your analysis. And then now you enter trades without confirmation. So the moment you enter trades without confirmation, what it means is that you ignore the risk. Right? So that you can just be in the trade, because you want to feel, you want to see yourself in the trade. Because sometimes maybe because the trade has left you, you might end up feeling maybe bad because the trade has left you. But again, that's not how you need to do it, okay? So what leads to those kind of decisions, especially FOMO? We are human beings, and human beings operate, the mind or the brain operates through dopamine. So there is a dopamine cycle that happens in your brain, especially in FOMO. That is when you have a fear of missing out. And the dopamine, what it does is that it gives us an anticipation of all the anticipation of the reward. Basically makes the dopamine to be released. So if you look at the setup and you see maybe probably this setup can give me $100, then what it happens to the brain is that the brain releases the dopamine, okay? So if it's a fear of missing out, or if it's a trade that has already left you, so there'll be that fear of missing out, whereby now the dopamine that has been released because of the reward will create what we call an urgency, okay? So it will create an urgency for you taking the trades, even if the setup is weak, or even if the trade has already left you. So it tricks your brain into thinking that action is equals to success. That is what dopamine does. And remember, in trading, not all action is equals to success, all right? So there are some real examples that maybe probably have happened in the markets. I know you can relate to these examples. Sometimes you might tell yourself that the trade has already moved maybe 20 pips, but I don't want to miss these. I don't want to miss more of these moves. And then now you end up taking the trade, and sometimes it can now retrace against you, meaning that the risk is high, right? So sometimes you have had maybe probably you telling yourself, everyone is posting about wins, okay? So I need to get into, or someone has posted maybe probably a Euro USD buy, and you are also analyzing it and you saw that it was a buy, but it has already left you. So because people are posting that they're in the buys, then now you end up jumping into the trade when it's too late. Okay, I know you can relate with that. Other things is maybe probably you have ever told yourself, maybe maybe probably you tell yourself that if you don't take this, then you regret. You regret in maybe later, because the price maybe will go direct to your TP. You are looking at maybe probably 120 pips, 150 pips that you're gonna miss, and then now you enter the trades when it's too late. Okay, so those are some of examples that, or some of the talks we talk with ourselves, inner self, especially now when riding under what we call FOMO, right? So as a trader, it is very important for you to recognize FOMO. And how do you recognize FOMO? Anytime you feel anxious watching charts, please, these are signals or maybe cues that maybe probably you are trading from FOMO. Anytime you see yourself rushing analysis, these are cues that you are operating under FOMO, right? Or anytime you see yourself comparing yourself with others, then you're still operating under FOMO. So those are some of the signs. So if you have any of the signs, the three signs that I talked about, you need to really evaluate yourself and check yourself keenly, because it might be that you are having what we call FOMO, that is the fear of missing out. So what are some of the strategies that can help you overcome FOMO, right? So number one is a pre-plan, right? You prepare your, or you plan your trade in advance. Okay, so you know your entries in advance. That is after you have done your analysis. So plan for that trade before it comes to your level of point of interest. Plan for it in advance. All right, and then now use entry rules and confirmation. Make sure that you confirm, just in case maybe you are so busy, the price might come to your entry and then it leaves you. You can use the pending orders, all right? Or maybe probably you can use trading view alarms, whereby the price, in case the price taps your level or your point of interest, you'll be able to be alerted through trading view, all right? So you find that also another way for you to avoid FOMO is limiting your screen time to reduce emotional pressure. So if you feel anytime you're in the market, you feel like executing trades, maybe probably like entering trades, that might also make you to trade from a point of FOMO. So you need to limit your screen time. And this one now, maybe probably you tell yourself, like maybe you are looking for like maybe 2 to 3 quality setup in a week. That's more than enough, right? Remember, in trading, we usually say that less is more. So and maybe probably you might think that maybe missing trade is it's a big thing, right? Or maybe probably it's more of a loss because you missed that move, you missed those 500 pips. But remember, there are some benefits of missing trades, right? And some of the benefits of missing trade is that missed trade is neutral. That is, you didn't make money, you didn't lose money. Okay, so better miss a trade and not make money than trade from a point of FOMO and lose money. It's so painful because you'll just be telling yourself, if I wish I knew I could have not taken this. My trading plan was this. I did not follow my trading plan. So you are regretting from your own mistakes, and that kind of regret is very painful compared to a regret whereby you waited for the price, everything confirmed, and you took the setup and it hit your stop loss. That is not as painful as trading, getting a loss resulting from trading from a point of FOMO, right? So, but remember also, a bad trade is equals to damage. So a bad trade, what it does is that it damages your account, right? That is a financial damage. It also damages your emotions, right? So your psychology is now distorted. So you are not in a point whereby you can be able to make quite substantial or a logic decision, because you might be trading from now after taking some losses. You might be trading what we call a revenge trading, right? So trying to recoup your losses back. Okay, So missing a setup keeps your edge intact. It doesn't distort your edge, all right? So it keeps your edge intact. And there is always another setup. Remember, I've always told you guys, right? When it comes to the world of dating, right, the ratio right now is 1:9. That is, one man is entitled to 9 ladies, okay? So because ladies are more than men at the moment, but in the markets, what we usually say is that the ratio is 1:infinity. So if you miss one setup, there'll always be so many setup, all right? There'll always be so many setup. So the key thing for you is to be able to be in a point whereby you're able to develop patience, okay? So if a trade has left you, don't rush into taking that trade, okay? So be patient and wait for another setup, because there will always be another setup. This is whereby I usually emphasize on focusing on quality and not quantity. Remember, again, in trading, less is more, okay? Use alerts. Like I said, you can use the trading alerts, maybe to notify you when the price has come to your point of entry. All right, and have an untrading routine. That is during waiting time. Look at something else you can do. Maybe you can read a book on trading. Maybe you can listen to music. Maybe you can do something just to keep you busy, even as you wait for the price to come to your setup. Okay, so some of the psychological anchors that you can be able to use in terms of avoiding FOMO is maybe you can tell yourself that no trade is better than a bad trade. Of course, that's a fact. No trade is better than a bad trade. Okay, so then you can maybe probably tell yourself that your job as a trader is to wait for your setup according to your plan. Then you can also tell yourself that discipline pays more than urgencies. Those are some of the affirmations that you can actually make that will remind you to be patient. All right. So as I wind up, remember, FOMO is emotional, right? And success is systematic. Okay, FOMO is emotion and success is systematic. So identify your triggers and refrain from them. So you need to identify what makes you to trade from a point of FOMO, and then now once you identify them, you reframe you refrain from them completely. And also, you need to master patience, because mastering patience is equals to market mastery. All right. So if this whatever I discussed resonated with you, please make sure to like, subscribe, and share. And until the next episode, stay disciplined, stay focused, and trade cautiously.